Welcome to XM.com. I'm Cristina Marujos, and you're watching the Daily Market Comment by Rafi Boyadjian. Talks in the United States and a new round of fiscal stimulus remain very much the focus for investors as time is fast running out for a pre-election spending bonanza. House Speaker Nancy Pelosi and Treasury Secretary Steven Mnuchin have reportedly continued to narrow their differences, with more discussions expected later today. The one-too-many question marks about the size and timing of the next virus relief bill overwhelmed investors on Monday, pushing Wall Street sharply lower. However, election anxiety also dampened the market mood. Democratic candidate Joe Biden may be comfortably ahead in the opinion polls, but the vote may still be too close to call, which could result in the election being contested in what would be the worst-case scenario for the markets. The political uncertainty in Washington was also weighing on global equities today, with Asia ending the session mixed and Europe opening in the red, though U.S. stock futures were modestly higher. The souring mood on Wall Street yesterday helped lift the U.S. dollar off its lows, and most majors continued to struggle against the greenback today. The Australian dollar was one of the worst performers as expectations that the Reserve Bank of Australia is prepping for major policy easing gathered pace. The minutes of the RBA's October meeting, published earlier today, strongly pointed to the bank expanding its quantitative easing program to include longer-dated bonds when it meets in November. A policy shift that expands QE to further along the yield curve could seriously undermine the Aussie, potentially sounding the death knell for its incredible rally. The Aussie was last trading 0.3% lower, dragging the Kiwi down along with it. The euro edged up on Tuesday, while the pound was flat amid confusion about the state of the Brexit negotiations. UK Prime Minister Boris Johnson is insisting that the EU must fundamentally change its approach for the talks on a post-Brexit trade deal to resume. But signs that behind the scenes the two sides are working to mend bridges is keeping sterling supported. Investors see the latest impasse as just another negotiating tactic, and that some form of free trade agreement is still doable before the year end. This was today's Daily Market Comment. Thanks for watching at XM.com.